Hello, my name is Raitis and welcome back to Farewell Total Return Investing. In today's video, we're going to do a weekly outlook and go over a potential trade idea for Tuesday's trading session. With that said, let's get right into the video. Before we get into the video, feel free to check out my Discord channel with the link in the description below this video. We post the weekly outlooks, commentaries, and potential trade ideas straight away into the Discord channel, so you would get exclusive insights into my trading approach and my trading analysis for the trading sessions, days, and weeks. Now let's get into the charts. As always, we start with the monthly chart. You can see dollar index. Let's remove this right here. So we start off with the monthly and weekly PD arrays. You can see this monthly candle is heavily bearish. We're tracing back inside the range. You can see we are rejecting the monthly fair value gap CB high, and we're back inside this dealing range. Market could potentially reach up into this fair value gap right here on the monthly time frame. On the weekly chart, we can do our weekly market structure analysis. You can see we ran higher above the buy side liquidity pool, reject lower from the rejection block. Market trades, closes below the bearish order block, the up close candle. Displays is lower from the monthly high, coupled with the weekly inversion fair value gap lower. The thing is, we are still, this is a bullish order block. We have the 50%. You can see we closed right at the 50%. Previous week close was right at this level. And now we are seeing that dollar started to rally. We came close to the weekly fair value gap busy again today. On Monday. And today we are trading inside the daily fair value gap. So on the weekly time frame, I'm really thinking market could sell off a lot more, just from what we're seeing, based on the candle closures and how the response is from the premium arrays. Rejection lower, invalidate this up close candle as a bullish order block, and then trade. Sorry, not bullish order block. We validate this bearish order block, sell off lower, and now we nearly close below the mean threshold of this bullish order block, which is really a key sign for bearishness. Also, weekly fair value gap was also we closed below that, so again, and then sold off on the next one. So this really bearish characteristics that DXY is showing us. On the daily time frame, what I have here right now is only the daily fair value gap, which we traded into, created relative equal highs with Friday, Monday, Tuesday runs the liquidity, and now we're seeing rejection lower from the daily fair value gap, and we actually start to see a nice bearish downtrend, market responding, bearish PD arrays and invalidating bullish PD arrays. So again, on the daily, as a market profile, as we broke below the low and we're seeing willingness to displace below this low, I think we can finally say that we are in a bearish short-term downtrend. On the weekly, I wouldn't say we're bearish yet, but still on the daily, I would consider this already a downtrend. Now, my short-term draw on liquidity is, of course, Monday's low, and then the daily rejection block right here. Excuse me, let me turn my phone off. So we have the daily rejection block here, which is at the same time a weekly fair value gap busy, the consequent encroachment of this level, so it aligns with that. So yeah, this is my short-term draw on liquidity, Monday's low, and let me quickly write this down in my journal. Monday's low is my short-term draw on liquidity and daily rejection block. So I'm doing my analysis live with you guys. We're going to get into the equities and outline a potential trade idea for today's session. So daily low probability filters. The daily chart is symmetrical. You can see our analysis from last week where we want to see bullishness on euro. We traded slightly below the volume imbalance into the bullish order block on the daily chart, and then let me delete this, and then rallied higher again, closed back above, and then market is starting to rally again today, right here during New York session. GBP USD also bullish, so we're seeing market symmetry on correlated assets, bonds. Also bullish, very bullish today. You can see started off to rally at the weekly fair value gap CB high right here. Used it as support, this premium level, and now we're trading higher, already up in the weekly fair value gap right here, and the monthly redelivered imbalance high. I don't think we will see any displacement lower. I'm bullish on T-bonds after we took out our open float liquidity target as a short-term objective. Let me see from this high. Yeah. Okay, now market is trading higher. We could reach up into the daily fair value gap right here, from which we left the consolidation. So this could be a short-term draw on liquidity, but again, T note futures are bearish and dollar is bearish. That's why this is a good sign. Also sign for correlation. That's why we can see a nice rally lower on dollar. So T-bonds, let's go quickly over the things. We have a bearish order block right here. Monthly order block open. Okay, this is it for the monthly time frame. As for now, weekly, I mean, we can leave the volume imbalance right here as it is, or let me remove this and draw in the weekly fair value gap. Okay, so this could be a level. Okay, nice. Now we're already at a premium, so market could distribute or consolidate going into the rest of the day. You can see London session expanded aggressively higher, so market could pause for the day, but dollar can still rally lower aggressively. That's still open for today. Now Euro GBP, just for this is Euro USD, Euro GBP for relative strength between Euro and GBP USD. On the monthly, we traded below the rejection block. Okay. Now this is a monthly order block low. On the weekly time frame, we have, so this is basically also a breaker. These two down close candles run higher on buy stops, trades lower. So this is basically also a breaker right there. We could trade to the low of the weekly order block. Not really necessary, as we are here contesting the monthly level right there, coupled with the daily fair value gap, which we're still trading in. I mean, many traders are anticipating probably a run lower from this daily fair value gap. That's why we could spike up into this upper bearish fair value gap, coupled with the weekly order block low, if we don't get any further bearishness from here. So that's that. I think this is it for dollar, interest rates, and the currency market. Now let's get into the good stuff. We have the equities, where we have a potential trade idea for this session. Let me quickly look what the market's doing. Okay, so I may already about to enter, but let's quickly do our breakdown. So monthly time frame. I'm focusing today on ES, but the analysis can be applied to NQ and YM as well. But YM, I'm really not interested in that pair. And this week I won't make the mistake, and I won't trade YM, like I did last week, or was it 2 weeks ago, where I did the mistake. I said I wouldn't trade YM, but I still ended up doing it, and it costed me some money, so I lost. So I'm switching for the time frames. Monthly time frame, we are at the high of the monthly order block. Now, this is the consequent encroachment from this monthly order block. On the weekly time frame, we are trading below the rejection block. We're still inside a consolidation profile. I think I mentioned this already, I don't know, 2-3 weeks ago when we started doing the weekly outlooks. I already mentioned that we're inside a consolidation profile, and we are still inside a consolidation profile. So don't assume that we had this rally, that we're bullish right now. ES didn't even close really up above the swing high. Again, ran out liquidity, sold off. Same thing that's happening for, basically since the start of the year. Market runs sell side, runs buy side. So basically this is our dealing range which we're trading in. Now, so ran sell side, ran buy side, and then ran sell side again, ran buy side, trades lower, runs out sell side. And now I anticipate just a simple reversal back to consequent encroachment, or to the mean threshold or fair value of this consolidation. This is what I'm trading, back to the mean reversion of this consolidation. So this is the plan. You can see we're seeing institutional sponsorship from this weekly rejection block. So I'm just playing into the consolidation type profile. Again, let's go through our low probability filters. Decoupled markets, no. I mean, YM is bullish already. On ES and NQ, we have still a bearish candle, but the last days we're trading in sync. Yes, of course, YM is weak. That's why we don't want to trade it for longs. NQ also sold off massively. ES as well. But I like ES a little bit more, even if NQ was bullish the prior weeks. I'm more bullish the prior weeks than ES. I favor really ES more. You can see NQ also is trading from a monthly level at the moment, but just from a lower time frame perspective, because we also have a... Okay, now I thought already my overlays gone, but we had this divergence going into from London into London lunch session. We had this divergence, and ES made a higher low, and I think, I mean, it's really tough. You could split risk between ES and NQ. That's probably up to you. I don't really await any manipulation. The thing is, we could leave this. This is also a balanced price range. That's why we don't have to revisit this price level. The market could easily spike up below into the BISI. And again, the protocol for BISI is we don't want to see the market close below 50% of this BISI. So if we get a candle closure on the 15-minute time frame below the 50%, then abort the longs. Abort the longs. And now we're seeing institutional order flow entry drill from this 15-minute fair value gap. I'm still gonna wait, but this is the trade. But first of all, let's focus on our checklist. So we have no decoupled daily markets. Market is, yes, it is inside a trapped order flow. That's why we trade with reduced risk. We don't over leverage. Price didn't meet a higher time frame objective within the weekly range. My short-term target would be the fair value gap right here, SIBI. Now, we already saw two large-bodied candles. That's why we could have some sort of overextension, especially Friday sold off massively. But again, my protocol is only applied for 3 to 4 consecutive down close candles with a large body. So that's why I will still take this trade, again, with a reduced risk. My drawn liquidity, as I already said, is the, again, 50% of this range. Sorry, this one. This is our dealing range. Above that, we have the daily SIBI. So let's see, 4 hour. Now, again, this is a reversal type trade. That's why the 4 hour market structure looks still bearish, because we would have to invalidate the propulsion block right here. Market trades up into this non-close candle, so sells off. So this should be a propulsion block, a bearish one, and we have to invalidate this level as quickly as possible. Otherwise, market could sell off today as well. Again, reversal type trades could be always tricky. That's why you have to watch out. And that's why I'm still waiting. It's 8:24 Eastern time. So we're still waiting. On the 1 hour, we have already a change in state of delivery. We closed above the down close candle, which is potentially a bullish order block. So let me line this out. Now let me check quickly what NAT and Q did. So NQ also, okay. We closed above this small fair value gap on the 30-minute time frame, yeah. Okay. So this should be a breaker from which we could rally. On the 1 hour, right at the mean threshold of this 15-minute down close candle. I'm just looking how to frame the trade before we move on, because I will be executing this trade if the opportunity presents. Now we have to frame a good risk to reward ratio for us. I would really hold until this level for a 1-to-3 risk to reward ratio, which is a monthly level, and we could see some distribution from there. And I will be very, 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 very disciplined in my approach with my partial taking on this trade, as we are still inside a consolidation profile. That's why I won't leave any runners on this trade, and I will completely collapse this trade over here. So with that said, this could be a potential trade, but let's quickly finish up our checklist. We have, so this is a reversal trade, already discussed that. Really, is this a market maker? Could be a market maker buy model. Initial consolidation, accumulation, sorry, distribution, and then we should see some level of accumulation for our, okay. On the H1 time frame, you can see, yeah, YM made a higher low on the 1 hour time frame, but I really don't want to trade YM because it can be really, really nasty. Also, especially coupled with the daily time frame and how it looks like, really don't want to touch this pair. So let's move on. We have that. So our H4 and H1 liquidity draw for this trade. Again, I will be very conservative, and if this trade reaches this level, this is my break-even point, where I will set the trade break-even if we reach above this high. And my H1 liquidity draw is this 1 hour fair value gap aligned with the monthly and weekly levels, so very strong level. This will be my target for this trade. For our liquidity draw, yeah, will be this high, where open float liquidity could reside. You could hold the trade like 20% of your trade for a 6 to 1 risk to reward ratio, which is amazing. But I will probably collapse the entire trade at a 1 to 3 risk to reward ratio and be happy with that. So let's move on. I'm always kind of drifting away and explaining the trade. So now we have our H1 and H4 liquidity draws. That's great. News. We have some news at 10 a.m. Again, tomorrow I won't be trading. Very, very likely, because we have a post 10 a.m. news release. And if you watch the earlier videos, then you probably know that we learned a lot what it means to trade a market when we have news post 10 a.m. and when we don't have any high impact news release before 10 a.m. I mean, we have one medium impact news release at 10 a.m., right at 10 a.m. Eastern Standard Time. But this can be very, very tricky and really frustrating. Market can offer the move tomorrow, but I'm really hoping that I can get a nice entry and trade from today's session, so I won't have to trade tomorrow. That will be great, and I would preserve equity tomorrow if we get something nice today. But again, so let's see. Let me quickly take out my protocols, have them written down right here. So this is a pretty uncut video. We're doing this analysis live. So I would be entering the consequent encroachment in 1 hour order block. And basically, if we have the divergence right here, so this is basically our offset accumulation model. And if at 10 a.m. news, I don't want to see the market run below this low, that's why we can safely buy down here, again, in close proximity to the monthly order block high, where we could see another level of institutional accumulation. Now, is London session overextended? No, I have these sessions outlined here. We have no stop run, or we do have a H1 stop run during London session. Yes, that's why New York could expand early. This is a great sign. So this could have been already our entry. Now, there's always the possibility market can spike up into this spike below this BISI and then rally higher. Now, again, this trade, the risk to reward is off. 1 to 2 is not in for me. If we would do something like this again, I would really favor something more of this kind. And then stop loss below 50% or the balanced price range low. Because I want to really get a quality risk to reward ratio also in this trade and not just chase price. So okay, the London session didn't meet any of our hard time frame objectives, and again I also wanted to see market displays through this premium array when we were down here, because we were consolidating and there could have been a possibility that market could sell off. So now we got the displacement. Now I know this level has been used as a level of institutional accumulation to drive price up higher. And if we return back down to this level, I would be very glad to long. If the market offers me that, that would be great. So let's see. Again, our divergence protocol with the previous session. I mean, again, we had this divergence from London session going into London lunch. So I don't really see the market trading below this low if we are bullish, and also below the 50% of this BC. Otherwise, we will definitely take out the low. Now let's get through the lower time frame probability filters. Okay, market is not a daily objective, weekly or monthly daily objective. The previous two sessions are not overextended. Today is not Friday or Thursday, that's why TGIF also falls away. So H1, we're not inside at the equilibrium. That's why that's great too. And we're not consolidating around the equilibrium. Again, we were at a short-term objective, but market displays through and inverse the PD array. That's why that's great. Okay. Let me go. So market ran, traded into a 40 IPTA PD array objective, which was the CB high, and we saw massive distribution to the downside. But because of the fact we already ran a daily low, I think it's a safe time to buy or try to buy reversal trades. Okay, so we had, this is not a seek and destroy profile in my opinion. Now we're seeing sustained displacement higher, so I don't see any seek and destroy characteristics in this trade. And yeah, so let's see what we have else. And tomorrow we have also no CPI, NFP, or anything FOMC. We don't have anything of that kind. That's why we don't have to make, we don't have to think about that. And then let's see, market may be already getting down into our trade entry. So again, I will probably split risk between the two assets. Even if I favor ES more, NQ is really a wild one, so it can really explode to the upside, and I want to be really caught with the sympathetic pair. We saw lower time frame displacement from a key higher time frame level. And we have a market maker model. Also on the 5-minute, you can say initial consolidation, distribution, again another level of distribution, and then smart money reversal with the divergence, and now we're trading higher. Market hopefully will retrace and give us an entry opportunity, or I will just shake the trade on ES and abort NQ, and then I just hope that we made the right asset selection. But as you can see, NQ is already selling off and already trading below the swing low, while ES is still above that. So this is a great sign, but again, divergence and leadership can change from session to session and from time frame to time frame. That's why we have to be flexible with that. But again, I identified ES as my leadership market due to the SMT divergence. and I hope we make the right decision. Again, we have a H1 stop run into a key higher time frame level. Market displaces, so the confirmation is there. Of course, reversal trades can be a hit or miss. Now let's define our execution checklist. So again, this is offset, accumulation model, stop loss below 50% of the CB, the BISI on the 15-minute time frame. First target is 1 hour fair value gap plus 1 monthly and two weekly levels. And this is a 3-hour trade, so all in the checks. So now I can price it my stop loss because we identified because we anticipated a reversal, which wasn't really there. So what I mean with that, we would be wrong because we anticipate where we say our assumption is that we're inside a consolidation profile on the daily time frame. That's why we want to trade the runs on sell side and buy side liquidity and trade the reversals from the extreme points and not some crap inside the range. That's why we would be wrong if the market would want to sell off and we are starting a bearish trend from this consolidation. Then of course we would be wrong. But as for now, we're just trading what the market information presents us. So open float liquidity is why the market, so many traders probably are just shorting after this massive sell-off. They're just buying the retracement. They have open float liquidity above this high and this high. Open float liquidity above old highs due to huge sell-off. I modify my risk when I get break even and take everything off at a 3-to-1 risk to reward ratio. So again, I'm writing everything down. I'll probably leave this in a recording. I hope you're not too bored. Otherwise, put it on double speed. Now, if my stop loss gets hit, I will allow for one more entry, but then on in queue, in just for the case that I chose the wrong leadership asset. That will be my only criteria for another re-entry. Otherwise, I will just abort trading because and we probably like to continue lower, much lower. And again, risk management is clear, reduced risk because we're trading reversal trades and we haven't seen H4 market structure being bullish. That's why we have to be a little bit more conservative on the risk. And with that said, ladies and gentlemen, this is it. A long video, 35 minutes already. With that said, I will update you in the Discord channel. Feel free to join. I will update you live on this trade if you watch this recording. And yeah, I will send this also out to my Discord because the video won't be uploading as fast as like in, the video won't upload this quick. to YouTube, and our entry is probably already getting hit before the video is online. So that's why we will send it out to Discord. So if you don't want to miss out on any exclusive insights or how I approach trading, how my trading style is, what my models are, and everything else, then we will see us in the Discord. And I wish you a wonderful day, and I will follow up with an evening commentary, and we're back in business with our evening commentaries and weekly outlooks. I apologize for the short break. I had to do some personal stuff, and take care of yourself, stay safe, trade safe, and we'll see us in the evening. Bye bye.